The new session is a new trends and innovation. Mr. Ivo Ditilinov, please. Please. Yeah, you have the mic. Can you hear me? Allah. Testing, guys. Huh? Test.
The panel coming?
Now it's working. Yeah, the microphone.
Could I have my panel, please, on the stage? Good morning, everybody. Ivo Ditelinov, Riyadh Capital. I've met many of you. It's great to see new faces as well. Good morning. Good morning.
Good.
Good morning. We miss a couple of my panelists. Can my panel please come on stage? I think they're getting wired up. Good morning, Alex. Okay, good morning. Thank you everybody on behalf of ArabNet. This is my 5th ArabNet in Riyadh, and I attend some ArabNet events outside my host city, Riyadh. I have to say, I find the event bigger every year. The content is better. I also find the depth of discussions better, a higher quality, and there is certainly more depth. The amount of change, specifically in technology, because I represent a technology fund managed by Riyadh Capital, is tremendous. When we raised our fund 3 years ago now, we were only guessing what the deal flow would be. And now I have to say, having made 11 investments and probably being halfway through investing our first technology fund called Riyadh Takniya Fund, we see tremendous amount of fintech opportunities. Not many of them are investable, not many of them have direct applicability, but in certain months, close to 50% of the opportunities that we see are fintech. This is not surprising. Fintech is at the beginning of exponential growth. We have continued the topic of fintech this morning with a very interesting panel representing me as a moderator, Riyadh Capital, Alex representing a challenger bank, Khalid representing a fintech enabling organization in Bahrain, Nijut representing Fintech Saudi, Gela coming from the UK, I believe. So I would let everybody on my panel spend 1 minute to introduce their job and themselves, and to specify exactly how they interact with the fintechs before we come in and start talking about the fintech trends that we see in our jobs and trying to figure out concepts and the direction that the fintech industry is taking place. So Alex, if you can please start first.
Yes, of course.
Mike?
Hello, my name is Alexander. I represent Talk Bank. Talk Bank is a virtual bank with artificial intelligence. So we work without contact center, we work without branches, own ATMs, even mobile applications. All we have, it's our banking cards and chatbots and messengers like Telegram, Viber, Facebook Messenger, and so on. So we support our clients and operate their money via chatbots and messengers with power of artificial intelligence. That helps us to save a lot of money on costs and provide extra value for customers because we don't need to learn how to use our bank. We get value from our bank. I think.
Thank you.
Thank you.
Hello everyone, my name is Badr Al-Girni and I am the General Manager of Fintech at the SME Authority. And what we do is basically enable SMEs and startups to grow in Saudi. And we focus on the Fintech side, working with Fintech Saudi and all the regulators in Saudi and all the startups. And I would like to add that it's a very exciting time in Saudi to build your Fintech company. Regulators and also all the banks are opening their doors to work with you.
Excellent. Good morning. Khalid Saad, CEO of Bahrain Fintech Bay, which is Bahrain's first dedicated fintech hub. That's the largest in the region. We are a platform with a physical side of things, but also an ecosystem that is built on a public-private partnership model. We have over 50 partners that are actively engaged in this ecosystem, both locally, regionally, and internationally. And we have 31 companies that are operating within Fintech Bay. The whole ethos of the project is based on what was mentioned in the earlier panel about collaboration and how do we foster that collaborative mindset between fintechs, traditional institutions, governments, and others.
Great.
Thank you. I'm Gela Boshkovich. I run the Fintech, actually, and InsurTech collab, which is part of Startup Bootcamp. If you're familiar with Startup Bootcamp, it's an accelerator. It's an entrepreneurial accelerator, and we have a number of programs globally, 27 amongst different verticals, and Fintech and InsurTech are two of them. I primarily focus on speed collaboration. When we're talking about how to do this, how to actually run a traditional RFI or RFP process in a matter of weeks rather than months. And I, on Friday last week, actually finished up our cycle in InsurTech, where we worked with a couple of partners and a number of scale-ups to actually design experiments, POCs, and pilots in 7 business days. And those are going forward, they're fully funded, and are starting on execution. It is about practical application of current technology that's scalable across the enterprise, but it's finding the right entry point for that particular scale-up to work with the institution, and actually cutting through all of the shenanigans that we always put around those particular processes. So when we talk about collaboration, I am in the room from the moment we design, or from the moment we identify the use case problem, to the moment we walk out with a signed commercial agreement. And when I talk about speed and applicability, and if this is doable, we have proven it over the course of 5 cycles that we can do collaborative innovation rapidly, and I mean rapidly, without the politics, without the lag time, and without the consternation of what traditionally we have done before. So I focus only on that particular collaboration, and it also allows me to see all sorts of technology under the hood across a number of different verticals. So I'm happy to talk trends, but I'm also happy to talk about how to actually collaborate.
Thank you.
My name is Najrud Malik. I'm the director of Fintech Saudi. So Fintech Saudi is an initiative launched by the central bank, SAMA, to look after the ecosystem of developing the fintech. We work closely with the community, with the regulator, and we work as well with the banks, and we create a platform where we connect all the elements of fintech to work perfectly in Saudi. Hopefully, we're going to see that in the future, of course.
Thank you very much. I mean, I just want to start our discussion. We recently prepared a presentation for our fund board, and we were trying to guesstimate and give some numbers to express the scope of the fintech industry, dollars that are going into fintech, and then specifically MENA, and then within MENA GCC. I would be very interested in hearing your numbers and the numbers that you have come across. But I've read that in the first half, fintech, for example, fintech investment attracted in the first half of 2018, fintech investment attracted $60 billion. So if we run rate this number, we would be over $100 billion for 2018 alone. Taking that number into MENA, we are a microscopic percentage of that, and the numbers that I have come across is 250 million. I don't think this number is correct. It's probably the number that just venture capitalists may have invested, but a number of fintechs receive funding from banks, which is a very interesting segue to things that I have seen, and then I'll open it to my panelists. The banks initially interacted with the fintechs thinking that this is intelligence, it's market intelligence, it's a nice to have to collaborate. Some went on to create accelerators and incubators, but more and more at various fintech forums, I see commercial bankers, corporate bankers, and retail bankers asking very nervous questions about blockchain, about payments, about digital wallets, because they see their business disrupted. So in my view, this is not a relationship that is nice to have, it's a relationship that you must have, and in certain cases, it's a question of survival. For example, I want to draw your attention to Alex's employer. Although Alex didn't join a bank, he created it. I just asked him outside, and they have 25 people employed in the bank and no customer service, and the customer service is a bot. Obviously, this bank is not for everybody, and it's a second or third banking relationship for people like me or the rest of my panelists. But I just find it fascinating that 40,000 people opened accounts with his bank, and they are processing another 200,000 people. So I want to start with him and ask him about artificial intelligence and blockchain and how they employ those technologies within this Moscow-based bank.
Thank you, Ivan. Indeed, we start our bank with few people. Because it's new bank, we find a bank partner who issue cards for us, but we work with our own brand, so clients knows only us. And when we started, it was a very crazy idea. Bank without branches, without mobile applications, only chatbots and our third-party messengers. But indeed, people do not want to go to branch, do not want to download mobile banking applications. They just want to spend their money and earn their money. That's it. And we think about it, how to make less discomfort for them when they working with bank, and find that they don't need to speak with people at all, because they just want to make some financial operation and so on. That's why we start to developing in chatbots. We start developing with artificial intelligence, because working in bank, it's working like a robot, because you have a strictly script. You have no options to provide this word or that word. You should speaking only as it right in your description. That's why we think that our chatbot solution can release banking employers from routine work and provide an opportunity to make a creative work, to focus on the value that they provide for the clients, value that they provide for the bank, for the owners of the bank, and so on. That's why we create our platform as a visual constructor, where our product manager can create business processes and see what value they provide to our clients, see the value that they provide for the bank, and the profit that they create with that product or that product, and so on. So we see that this business model can scale globally, because a lot of places were the same problem of banking services, and not only young people want to use it in messengers because they live in messengers every day, but even older people who start to use WhatsApp to see their grandsons and so on. They can use our solution, and we see that all those people that use TalkBank, it's 60 years old, so it's not only for the youngsters, and so on. More than that, we see that technology of blockchain can provide extra opportunity to cooperate with different types of companies, not only financial companies. We issue first cards with tokens with retail network, so our clients can use with token to get some benefits from retail network, or sell them, or change them, and so on, and see that it's clear information about where points, bonus points of this network, and so on. And a lot of opportunity we can create on global scale when we work with different banks from different countries and provide this entire blockchain to connect different banks in one platform with one level of service and one level of trust to financial services of our brand. Besides that, we see that some banks want to use our technology, and their clients not very similar to our clients, they're more traditional, but we can use our value of automatic support service when we can decrease the contact center costs for this bank, and we provide a white label solution for them to make their business more digital, more transparency for the management, and so on.
Thank you. Gela, I want to come immediately to you. I know from your background you have experience in artificial intelligence and blockchain, and specifically as it relates to banks. Why have we been talking now at least for 2 years about blockchain and longer for artificial intelligence, and the adoption by banks is still fairly low? What is your view? I know you have strong views. I don't know if you will complement or contrast what Alex just said.
No, I think the application. So let me break it down just a little bit. The application of artificial intelligence to certain functionalities across the bank is immediate and has significant impact. Robotic process automation, RPA, that takes care of a lot of the manual processes that involve very little human thought, can be implemented or deployed across the bank very, very efficiently. There still needs to be a human in the loop for certain things. For example, in the lending space, we can look at AI applications for account aggregation. So, for example, if a small business is actually looking at a loan, we need all of their accounting information. Sometimes that requires an OCR solution that scans and pulls out and extracts the data to populate a field form that we need in order to process things. Sometimes it's actually being able to connect via a RESTful API to an online accounting solution like Sage or Xero, and taking all of that information, again, extracting it, doing it using AI/ML in order to populate the fields that we need in order to assess the risk of a particular business. And that can be done all the way through onboarding the client, using, again, OCR, facial recognition, or biometrics to do authentication and validate who that person or that client is, extracting all of the relevant information to run through a risk profile. The risk profiling is done by AI. All of those risk calculations are algorithmically based anyway. And we can do that all the way through the funding and the underwriting process, and the funding release, and then the loan management. All of that can be driven by artificial intelligence. So there are many different use cases that are relevant to this, and there are solutions on the market that do this. AI, in terms of where it's going, is about actually removing as much burden from the human process as possible. That makes perfect sense. Now, when we talk about blockchain, that's a very different thing. And AI on blockchain is wonderful because it's just a matter of being able to push that information for mining, for validation, that then can be hashed to the chain. Blockchain is interesting precisely because it fundamentally takes away the centralization that sits within the banking organization. Adoption is slower because we're trying to find use cases that are relevant, that don't necessarily threaten the political stance of the banking, especially central banking organizations, in order to kind of federate or decentralize some of that trust mechanism. The interesting thing about blockchain is that it actually does a doozy, and I don't know if that's the right translation word to use right now, but it fundamentally upsets what we've been doing in terms of data sets and how we organize our data sets, because all it is a ledger of entries. And what it doesn't require is a central authority to then validate that particular transaction. It requires a number of other parties to prove the work. And the value created is in the proving of the work. Right now, that cuts out a number of different middlemen who actually get revenue from that centralized validation point. For example, clearinghouses are completely removed from the need to exist if we use blockchain, or if we use decentralized ledgers in order to validate transactions. And I'm going to be really controversial and say MasterCard is actually no longer needed as a third-party holder of a particular transaction because blockchain can remove them from the system. It's because we have embedded infrastructure and players in the ecosystem that will fundamentally be removed if we actually deploy blockchain fully. Now, from a particular efficiency stance, I think it actually makes a lot of sense in terms of actually asking everyone else to do the proof of work and then rewarding them for that value that they contribute. It's a different economic structure in terms of how we actually start to record and prove work. So it's a very different thing. But in terms of what we've found that actually is useful for blockchain, supply trade, and trade finance, we have to move one particular item from place A to Z, and all of the parties in between, we have an actual real-time log of that particular product or that particular financial transaction recorded. And we know exactly where the money is, we know exactly where the product is, and we know the risk profile of that particular product on the insurance side as well. So there's actual transparency, there's visibility and real-time update. That has incredible value in terms of how we actually start to structure the financing for the moving and the transaction of those goods. And that's where we're finding the utility in the banking space right now. If we were to actually look at exploiting the full value of blockchain, we would fundamentally ask a number of different parties in this current ecosystem to stop existing. So that's why I think adoption has been low.
Yeah, and I also would add the role of the regulators. In Europe, for example, from January 1st this year, we have the open banking, whereby banks have to open up their systems to promising fintechs, who then through APIs can market following a consent to the banking customer. I think that's tremendous because the banking customer will have more services marketed to him or her, and the bank will probably feel that some part of their business is threatened, but that is mandated by the regulators now.
Not necessarily threatened. I think open banking is very interesting precisely because a third-party provider still has to be regulated by. They have to be licensed and regulated as well.
Correct. But still we're sharing the same pie. You know, my mortgage has been with this bank, but now I'm pitched, other auxiliary services.
Here's the thing.
Or a new mortgage or a new credit card.
But we're finding marketplaces pop up in accordance to open banking. So for example, there's a particular solution called Bud, which is a marketplace application. They partner with the likes of HSBC and First Direct, Lloyds, Barclays, etc. in the UK, a number of the high street banks. And what they do is they use open banking APIs that only 9 are actually live and working. There are a number that are still yet to be deployed. But they do the account aggregation information, and they look at best offer, which doesn't necessarily detract from a bank's opportunity to capture their market or keep their market. It does enable the right product to get to the right person.
Correct.
But the other thing we have to remember is it's also really hard to be a third-party provider, especially in the payment space, if you're going to be trying to challenge the bank for their market share. Instead, what we're doing is seeing the revenue share model where those particular third-party providers are partnering or doing a white label service for the bank. And so the bank actually gets to their customers easier. They offer a better service under the white label, and they still hit the revenue. It's just a revenue share model. So no one's actually losing. They're all gaining from open banking. The thing we have to remember, though, is in particular jurisdictions, regulation is driving the innovation, or it is pushing. In Europe, it is very much led by the regulators. In North America, for example, it's the market that's leading, and the regulators are slow to respond. In Asia, we're seeing a market-driven / regulation / government initiative approach.
It's a push.
It's a push,
strategy.
but it's also a pull.
Yeah.
The market demands it, but the regulators are very quick to frame this out. And the establishment of sandboxes globally are starting to experiment and allow experimentation and pushing new business models and encouraging both the banks, the ecosystem, the infrastructure providers, and the fintechs to find new solutions. We're looking at operational efficiencies, but we're also looking at moving beyond fee-based revenue and pushing to a value-added service. So it's being led from both sides. It just depends on the jurisdiction that you happen to reside.
Yes. I want to touch base on best practices from institutions such as Bahrain Tech Bay or the newly created Fintech Saudi. So I'll start with Khaled first. What works in your interactions with the fintechs and the regulators, because you are kind of in the middle, and what doesn't work, and what can we apply here in Saudi, and then Nijut perhaps can share what has been working in her experience with Fintech Saudi.
Absolutely, and I just want to also build up quickly on a point that was mentioned earlier, and I think it's important. I think your traditional financial institutions, because we recently finalized the paper for open banking in Bahrain, and that was last week actually, and yesterday we had the first exit from the Sandbox, which is a open banking API company, the most advanced in the world, and that gives customers experiences, you know. People want experiences, they don't want services, and at the moment institutions are just offering you services. They're not really offering you the basic utility with an experience, and I think that will help them retain customers and probably grow the market. On the point of, I think, what works and maybe some of the key takeaways, especially for Saudi Arabia, we've been pushing this agenda in Bahrain for a few years.
The open banking?
Not open banking in general, developing the fintech ecosystem.
Yeah.
I always say we did it with two main reasons, I think, in mind, I always say, but I think it's much wider than that, because I think fintech to me is a mindset, it's an ethos that we need to do things differently. But for us, the premise initially was simple. We've got a massive financial services sector, 17% of our GDP, it's the second largest contributor to GDP, and it's the largest non-oil and gas sector, with oil and gas only being 20%. And so for us, the disruption is here. We have to make the most out of it. We have to embrace it. We have to understand what it means. Everybody here in the region talks about the digital and innovation-driven economy, and for us that made a lot of sense because that sector is pretty big. Having said that, it required an enormous amount of work on multiple fronts, the regulatory front, the institutional front, and then also on the industry or fintech side of things. The regulators initially, inherently by nature, are extremely conservative. And I will quote the governor because he's publicly said it on so many different avenues that, you know, regulators a couple of years ago were completely ignorant about it. But now they've said, you know what, the world is changing, and whether we want to be relevant as a regulator would depend on how open we are in terms of embracing this change. And so what has happened increasingly also to help bridge the divide between industry, innovation, and the fintechs, and the regulator obviously, is that the barriers to entry have gone down. The incumbents are no longer that protected or comfortable in doing business as usual. Obviously things like the Sandbox came up. There are 24 companies in the Sandbox from all over the world, region and all over the world, and they are literally now challenging the incumbents. So what we have seen over the past few years is an acceptance and a willingness, one from the corporates to say, you know what, I actually need to start talking to these companies. It wasn't the case before. It took years. And starting to realize that you can't really do it all internally. The fintechs, I think, initially came in, a lot of them, with the idea that we're going to be wiping out these incumbents, and that's not the right approach to go in. And so what we've been trying to do also more increasingly is how do we better understand what are the needs of the industry and our partners, and, you know, we're doing that on a day-to-day basis, and what are these new innovations or ideas that are coming in, what do they need, and how can we do that meaningful matching? And I think we've reached a point where institutions now realize they need to look at it. Some institutions have gone from being ultra-conservative to doing incubators, accelerator programs, and literally, I'll give an example. American Express, MENA, did their accelerator program, and instead of saying, you know what, we will hide all of these innovators, keep them for us, they did a public demo day where they invited the rest of the ecosystem and said, you know what, here are the key takeaways we've learned. Start talking to some of the fintechs that we've talked to, and let's do that. The regulator also we work with very closely. The regulator is now extremely open to talking directly to fintechs, which is important. And we have forums where, and I think this is really important, where you get the incumbent and the fintechs and the regulator and other public agencies on one table and start addressing some of the concerns in a very open way. And I think that is what has really helped foster the collaboration. When it comes to, I think the experience in Saudi Arabia, I think there are a lot of key takeaways or learning points from what we've learned. We're willing to transparently share our experiences with Saudi Arabia. And for us, I think, and this is the stance that we've taken is, we're open about our learnings. We're open about collaborating. I think anybody that paints this industry as a zero-sum game, I think that's the incorrect attitude. And Middle East is less than 1% of global investments in fintechs. So there's a big pool, but it required a lot of open mind, being open-minded, regulator, industry, and the fintechs. And I think still, I agree there are a lot of fintechs that don't really have a tried and tested product. They don't have a track record, or they just don't understand what the industry needs. And there are still people that are scared from the fintechs and the changes that are happening because they don't really understand what to do of this new world. But it all starts by talking and being on that one platform, one table where these interactions happen on a regular basis. And I think that is ultimately what has driven a lot of the changes forward. And it's that alignment which is, I think, very important.
I would like to add to that. What happens in the technology space and when you mix it with the financial services space is that you have a highly regulated industry and then you have the technology where what they do is they build, throw it in the market, and then play with it and test it and see how it works. And then later on, if it fails, it fails. There's no huge implications on the customers of those technologies. But when it comes to the financial services industry, you're talking about any impact on that industry is going to impact the financials of the customers of that bank and also the financial data of those people. And those two things, if they are hit or hacked or anything that happens to them, what will happen is an impact on the local economy, on the international economy, and there's no solution to fix it. So because of that, you will always have that need to get them all to sit together and do that mix between a little bit of regulation and a little bit of technology together.
Thank you, Badr. This is really great. Just go back into the AI conversation specifically. So for Saudi, we need to store a lot of large data. And that's one of the challenges that we have today. So in order to develop AI solutions around the market, we need to develop a lot of large data. And that means that we need to use cloud services, which is still restricted around. However, having said that, and which is going to be cost effective as well. And however, having said that, wearing the hat of the central bank, we can see that the central bank today are working on testing the blockchain. And they have initiated a project where they're one of the first to use Ripple for payments. And as well working with UAE on testing digital currency. So that's really great in terms of setting the infrastructure and regulatory framework for both, for banks, for fintechs, and for investors, and for everyone to feel comfortable when they want to kind of initiate new solutions and platforms around the Saudi market. And going back into the Saudi market, it's too early again to say what kind of verticals that we have in the market today. We just started, so we were looking at mobile phone penetration, we're looking at payments, we're looking at remittances, and all of these are still at early stages. But we're looking, once the regulators finalize the framework around the infrastructure for these innovative technologies, that will help as well the fintechs to develop much more innovative solutions around the market. And definitely, we have a lot of discussions with Bahrain around that, and we would love to learn and exchange experiences as well.
I think, Najud, if you may allow me just to add a couple of points which are, I think, important on the infrastructure side. And I think it's helped Bahrain a lot, and I'm sure it's a similar experience. It would be here in Saudi. The government is very aggressive, so we have a cloud-first policy as a country. So the whole government is literally moving to the cloud. I think it's going to be the first country in the region, literally, and that's work in progress. And that was also on a mixture of Microsoft Azure and AWS putting their data centers, 3 huge data centers live next year. the country has already signed a deal with Kuwait for the Kuwaiti government to move their data. So the government, being also digitally savvy and cloud enabled, forces the hand of the industry to also follow suit. The other, I think, important development, which will be a boon for, aside from open banking, is standardizing a national eKYC utility for the financial services sector. And that is, in partnership with the national switch, the regulator, and the custodian of data in Bahrain is the Information and E-Government Authority, which is the IGA. And I think so there are certain national initiatives which have also helped bring people to the table together. And so I think similar experiences in Saudi will tremendously help, I think, the market move forward.
I want to jump in here because I think it's quite interesting. We're talking about trends, and yet we're talking about regulation. Stay tuned. There's a regulatory panel later this afternoon. But it is in terms of how can we enable the environment for rapid deployment of technology, and data storage is absolutely an issue. If we're looking to move to cloud, it's a nuanced thing where we're worried about the security. We're also worried about where the data sits and resides in terms of jurisdiction. That's what's quite interesting, as we're seeing in Europe and in some cases in North America, the move to actual cloud, not just private cloud. And that comes with what the General Data Protection Regulation overlay, the privacy overlay for, for us now, it was live as of May this year in Europe. And that has massive implications on how data is shared or how it's actually, where it's stored, et cetera. But it does put a framework around what we're able to do. And so rapid innovation is actually very much limited by the infrastructure and the proprietorship of that particular data structure and infrastructure. What I think is quite interesting is, yes, central banks using blockchain for settlement and remittances is one of the best use cases we've found in the industry. And the interoperability component from different solutions, and we're looking at Ripple, which is quite a conservative, more private blockchain, to Ethereum, which is completely open sourced. And we're having those discussions in the crypto community about what the best infrastructure is in order to enable a rapid deployment, but also improvement and interoperability of those particular types of blockchain projects. And when we're talking about what actually is stored and what is most useful, eKYC is absolutely one of them. But it's this notion of self-sovereign identity that can be ported anywhere in any jurisdiction that is valid across that. For businesses who want to open up cross-jurisdiction, different countries, for individuals who need to validate who they are for any particular service, financial service anywhere in the world. Blockchain actually enables this, which is really fascinating. But there are so many different frameworks. It's not just the technology, it's the environment around the technology and the thoughtfulness, the mindset at which it's deployed. It's interesting that the trends are not necessarily in the tech themselves. The transformative technologies are pretty much limited to artificial technology, tokenization, and deployment of blockchain. Tokenization being the most interesting thing because it uses both of those particular things, and it's data driven. And data is the new currency. It is with digital assets. Literal crypto assets are the new form of currency. Although your wealth is not tied into them, your wealth is actually tied into something much more esoteric. It's your personal data. It's your time, your attention, and your personal private data that has most value. The privacy around it has the most value. But those are the transformative technologies, that's it. It has nothing to do with, that's it. There really isn't much more. What now shapes innovation is how we look at business models. For example, launching joint ventures. Institutions launching new banks, their new digital banks to the side. They're actually opening up businesses, doing settlement and remittances at zero cost, and then marketing them to the rest of the industry. It is about banks actually thinking, cannibalizing their own current revenue in order to stand up a new channel or a new line of revenue that will replace it. That's where innovation is. And they can use technology to do it, but they have to think differently about the business model. The business model is no longer what you think it is. What you offer today will not be in demand tomorrow. So do not plan for doing the same thing or delivering the same service. It needs to be thoughtfully done around what is driving the economy these days, which is the flexibility and the insight of data, actually capitalizing on that, and capitalizing in such a way that you give the customer an opportunity to make revenue off of themselves, their data. And you are, as an institution, more of a custodian of that data. that's where the innovation is lying. It's not necessarily in tech, it's in the business model.
Data.
I totally agree. I always ask this question. I own my data. Apparently not, but anyway. So we've seen trends with banks as well, where they actually looking at their line of businesses differently right now, and they're looking at their products differently right now. We've seen that investments and joint ventures, or maybe partnering, or even investing accelerator programs to support fintechs, because at the end of the day, they need to develop new technologies, a new way of doing business. So once we had that session at the Future of Banks, and it was well attended by the seniors at all banks, that was in April, we've seen a lot of shift in how the banks are looking at their line of businesses and how they're investing into it and their product design. But again, they need, of course, the comfort from the regulator, because between banks and the regulators, they both work together closely in terms of creating the infrastructure and the framework, because banks are highly regulated by the regulator, and banks are sitting on the board of the regulator. So between this and that, you need to, that's what's happening actually, shift in thinking.
Yeah, in Russia we see that regulator push innovations because it's simplified regulations of financial organization, and it's much more easy to regulate full digital transparent business when traditional old with inconvenient business process and non-transparent risk-taking business model. So we see that regulators push innovations on fintech field and banking industry more than even banks, because the regulator has own profit on these innovations. But besides that, changing the business model makes extra profit for banks. We do not talking only about how we change the share of the banks, because technology change the level of profits on the same services. So when we use technology in our business, we can get less revenue, but we can get more profit on this. And that's why I see that fintechs do not eat share of banks. They change the way the banks eat the whole market.
Well, I think we have 5 minutes, and hopefully we can take some questions. I'll just end up by saying what my expectation for a continued trend may be, having read and having dealt with fintech and fintech investing for the last 3-4 years, which is not a very long time, by the way. I think change is happening too fast for the regulators. There are many fintechs. I saw a number 500 fintechs in MENA, and that number to grow to 1,000 fintechs by 2022. It feels right. I think about maybe a third of those 500 are in GCC. There are fintech events all over the GCC. Change is happening too fast. More fintechs are created, and the regulators cannot catch up. In my interactions with the local regulators here in this region, I have to say that we see younger and younger people, which is very good, and they ask better and deeper questions. Some of those questions we cannot answer because we don't have the fintech next to us to actually answer the question that the regulator is asking. This is very good. I also hope that the regulators continue to talk to each other. Example, Europe. Europe has a central European regulator, but each country has their own regulator, and they all talk. So that's a very good thing. The more they learn from each other, the faster the change will be. And for me, I'm a purist. Change equals good. So I'm a consumer, so I think change equals good. I probably wouldn't think the same way if I was a banker doing transfers for 5 days at 50 Riyal the transfer. That time is unfortunately gone. So I also think that banks will continue to buy fintechs. The reason is some fintechs cannot wait for the regulator to give them a standalone license. So the bank acquiring the fintech immediately validates the model. So the fintech founder will probably lose some value by selling out to JP Morgan, but that will immediately validate the model. JP Morgan may do something with that business, or that business may be failed internally, but I see continued acceleration of banks acquiring fintechs just because fintechs cannot wait for the regulator to give them a license. But
Yes.
I remain very optimistic, and I think
I would,
we'll
yeah.
continue to look at fintech extremely carefully, and investment dollars will chase fintech companies.
Sorry to interrupt, but I want to add one thing. We talked about a lot of complications in the environment of fintech. What I would like to add is that there is a huge potential in the Saudi market. We are now investing in the SMEs and startups. We have almost 14 billion Saudi Arabian riyal within Munshaat to enable the ecosystem here in Saudi Arabia, and we are focusing on fintech companies and innovative companies. We have a government VC with 2.8 billion SAR, where if somebody invests into a fintech company, we co-match. Manafa is one of the examples of our partners that we work with. So if they invest into a company, we will co-match that. We also have 1.6 billion SAR for indirect lending. And the indirect model for us is really to enable the lender, the funder, and also the SME and startup, so that when we go out with our funds, they continue the cycle without having to go back to Munshaat. Also, we are reimbursing any startup and any SME with that had to pay government fees. That's about 7 billion SAR allocated for that. So I want to let everybody that wants to build a fintech company here in Saudi to be excited and really to push forward for that, because it's not going to be the typical 5 years that we had previously. Now SAMA is opening its doors, CMA the same thing. So, and also we will support Fintech Saudi to really direct, and also we were talking about how we can work with Fintech Bahrain on some of the stuff that might need different regulations or need maybe a global market. So on an optimistic note, I want to open that for everybody to know that this is happening in Saudi today.
Yes, and we're part of your program, the matching program as well.
Great.
So
great.
can we have 2 to 3 questions just in the interest of time? Or we don't have any time? But we can catch the panel afterwards, perhaps we can.
We're happy to take any questions offline.
Offline,
Yes,
So it's time
thank
to
you
move
very
on.
much.
Thank you.
Thank you.
Thank you so much for our speakers. I would love to welcome Mr. Najib Tawhiri from RBBI. Mr. Najib, please.